Hi, Rowan and Ryan here from Green Taylor Partners. We're just giving you a quick rundown on what we saw as the big major points coming out of the federal budget last night. By all means, this is not an exhaustive list, and we'd encourage you to stay tuned and read our newsletters as we come to grips with a few more of the changes. We'll definitely be getting in touch with you and letting you know. So Ryan's just going to cover off the first point.
Yep, so our first main point we pulled out of the budget was the extension of the $20,000 instant write-off for plant equipment purchases for small businesses. This was expected to expire at 30 June coming, whereas now it's been extended for another 12 months, so it'll expire at 30 June 2019.
Real welcome change that one's been. The next part of it is the extension of the taxable payments reporting system. This has been in now for 2 years. It's mainly covered people in the building construction industry in the first few years. Then last year it was introduced to the cleaning industry. Now, as of 1st of July 2018, so the first reporting period is going to be actually after 30th of June 19, all those industries involved in the road transport industry, security providers, and also in the computer system design area are also going to have to report any subcontractors of which they pay money to. So that's something you need to be on top of and start tracking as of 1st of July this year.
So another key takeaway was the creeping of the tax bracket, especially for the 32.5% tax bracket. Now that has been previously capped at $87,000. That now gets pushed out by an extra $3,000 to $90,000, and that starts as of 1 July 2018.
There was also the announcement, and in the media they've been picking up a lot on the extension of the 32.5% right up to the 180,000 threshold.
Yep.
However, that hasn't been won't be coming in until year 2024. We've got two federal elections between now and then, so whether that we actually get to see that in its fruition, we'll wait and see. The next point we want to cover off is probably the low and middle income tax offset. This will be what you call a non-refundable offset, where you could receive a maximum of $530 up to earning $90,000, and then it'll decrease until you earn $125,333. When we say non-refundable, it means if you haven't got any tax to offset, you don't actually get the money in your own right, so it can only reduce your tax payable.
And the last one we were able to pick up was the extension to the director's penalty notice regime. So at the moment that is for any directors of the companies will become personally liable for any unpaid pay-as-you-go withholding or superannuation. This is now extending out to GST, luxury car tax, as well as unpaid wine equalisation tax.
Which is a massive change, and that can really come as a shock, and we need to make clients really aware of that, because the director will actually receive a notice, and if they don't respond to it within a certain period of time, actually become personally responsible for the debts of the company for those taxes. So that's just a summary of a few of the major points we saw in last night's federal budget. Like I said at the start, stay tuned, read our newsletters. We'll put out more information as more of these things actually go through Parliament. Some of the things in the budget may not actually get through. There might be some tweaks along the way. Thanks for watching this video, and we hope to see you soon.
Thank you.